There's a problem with reporting 1099 DAs on your tax return. Let me explain what it is. Real simple. Imagine in month one, you buy one Bitcoin. In month two, you buy a second Bitcoin. You've kept them both on an exchange. In month three, you transfer the first Bitcoin, which will have to be the first one you bought, to a private wallet. You then, the next month, you move that coin from that private wallet back onto the same exchange. And now in month five, you sell a Bitcoin that's on that exchange. There's two Bitcoin. Which one got sold? The one that you bought in month one or the one that you bought in month two? And the answer is different depending upon who is filling out the form. The way exchanges have to report it on a 1099 DA is not the same as how you have to report it on your tax return. They might say, that's horrible. It is. Let me tell you, you're required to comply with the regulations 1012-1, subparagraph J, which says that you have to report the earliest lot purchased or earliest date acquired, which means that you're going to say that it is the Bitcoin you bought in month one that was sold. That's the cost basis you're going to use. But exchanges like Coinbase and Robinhood have to use the reporting regulations as stated in tax code section 6045G, which states clearly that if a coin has transferred onto the exchange, then the exchange is supposed to treat the cost basis of that coin as though it were acquired in cash on the date it was transferred into the exchange. All right. On that logic, given our example before, the coin that the exchanges are going to report that was sold in month five will be the one bought in month two, because the one bought in month one didn't reappear until month four, if you will, so it's later. And so the oldest one will be the one in month two. It'll be a different cost basis than what you're going to have to report on the tax return. Well, this is a mess. This is a mess. How can you handle that? And here's what you do. It's very simple. In simple words, and we'll lay it out in detail on screen. Basically going to subtract out the 1099 DA and then insert capital gains as you calculated it using your tax calculation software for cryptocurrencies. The 1099 DA eventually has to get reported onto your tax return. It will get reported here on IRS Form 8949, which is like a spreadsheet. The first thing you do is you have to check the right box. The box in the upper half, you have to check G, H, or I, and the 1099 DA will tell you whether it is a short-term or long-term, whether its cost basis was previously reported or not. So you check the correct box for that. But then down below in the grid section, in the first entry, what you would write would be something like this. It might say Binance 1099 DA, and then where it says date acquired, you say various. This is a standard setting. Date sold, various, proceeds, whatever the total proceeds is from the 1099 DA for that type of asset. Sure, the cost basis will be blank. In column G is where you're going to put the negative $100,000 adjustment. So if you reported $100,000 in proceeds, you're going to make it a negative $100,000 adjustment. You're subtracting off all the proceeds that Binance is reporting so that in column H, total gain, that shows up as zero. Okay, that's how you subtract it off. Then in the next columns, you enter the total capital gains, in this case, short-term or long-term, as you had it calculated using Coinly or CoinLedger, coin tracking as a number that you calculated there. So that's how you add that in. This way you're accounting for the 1099 because the IRS expects you to account for it. If you don't, you're going to get an audit. But it also makes sure that you don't get bothered by the numbers that the exchange is reporting. This is how you do it. And you will find that if you do it this way, you won't get bothered by the IRS for inadequately reporting your cryptocurrencies. We've talked to lots of other firms. This is how everybody is recommending doing it at this point. Until the IRS fixes this problem, which I think is unlikely, this is how we're all going to continue to do it. Now, if you bought, sold, traded on one exchange, never used any other exchange, this wouldn't be a problem. You just live with the numbers that come from your 1099 DA. This is what the people in the stock realm do with their 1099Bs. So in short, you subtract off the 1099 DA's total proceeds so that it shows zero gain. You enter it as a single line item, and then you enter in as a single line item as well your summary amounts from your cryptocurrency tax software. If you have any problems, you can contact our Director of Customer Service, Kent Bowen. He can schedule a tax return review. Just make sure you plugged all the numbers in the right spots. I think you'll really appreciate it. Thank you very much. Have a great day. Thanks for using CryptoTaxAudit. Like, subscribe, and follow.